Welcome to Invest Out West podcast. I'm Nat Micken.
And I'm Kahlia Micken. We are a husband and wife team who live and invest in Western Queensland.
Join us on our journey of creating passive income through mindset, business, crypto, and property investing. Welcome to Invest Out West episode number 11.
Today we would like to lead with a quote from Warren Buffett that says, "The stock market is a device for transferring money from the impatient to the patient."
Yeah, I really like that quote. I find that is very much in line also with the crypto market. So that's sort of why we chose that quote today. Now, we're sort of going to go into a little bit of detail about our thoughts on the crypto space and how it's performing. It's just sort of been on a tear for the last couple of weeks, and so on the 29th of February, Bitcoin hit an all-time high in Australian dollars, but it still didn't go anywhere near all-time high in US dollars. And so I wanted to sort of talk a little bit about that and why that was the case. The all-time high, it happened back on the 11th of November 2021, and that hit 68,000. There's different reports, but somewhere around 68,500 is what it got to. Some reports say as high as 69,000 briefly, but around that 68,500 US that happened on the 11th of November 2021, and the Australian equivalent at that time was $93,260. And so today we're recording this on the 5th of March 2024, and that the price today, it's sort of been hovering around a fair bit. It's been got a fair bit of movement today, but it's been sort of roughly as at the time of recording around 66,000 US and 102,000 Australian. So when I look back at what the Aussie dollar was to the US dollar back at that time compared to now, I found that back then, so the 11th of the 11th, 2021, one Aussie dollar was buying 73 US cents, and today it's buying roughly 65 US cents. So that's an 8-cent difference, and that's why it's made a fairly big difference now in the two different all-time highs. Like the two highs that are happening at the moment. So that's sort of why most crypto investors, I guess, you could say, they sort of mostly work in US dollars and just keep it at one thing, and that's the advantage, is because it's always the same then, regardless of exchange rates in different currencies. So I like to look at the crypto market in Australian dollars, just because it sort of resonates with me better, but that is the drawback, is there's always discrepancies between especially with all-time highs when you have that long a time frame. So with the crypto that works in a four-year cycle, it's got a fair bit of time to have different discrepancies in the exchange rates over that time frame. So yeah, that is always the catch, using different currencies. So looking at CoinGecko, it tells me that there's the next halving will happen is predicted to happen on the 21st of April this year. So that's going to be from the time of recording. It's roughly 47 days away, and it's saying that there's still 6,763 blocks to go before the halving happens. But what I wanted to just mention was that it's reported that after the next halving, that Bitcoin will become the most scarce thing on planet Earth. And so you couple that with the ETFs that are putting huge pressure on the Bitcoin supply at the moment, the new ETFs that have been launched, and that's only going to become more so over time, I believe. And so what I look at is, when I think about the next Bitcoin halving events, 2036, the Bitcoin block will fall to less than one Bitcoin per mined block. So that, I believe, will be when Bitcoin really starts to become ultra valuable and ultra scarce, because there'll be such a little amount of new stock coming onto the market. So that's sort of something that I am looking forward to. So when this happens, this halving happens, so we're at 6.25 Bitcoin per mined block at the moment, and after the 21st of April, at this stage, it will drop to 3.125 Bitcoin per block. So the analysis that I have been looking at, and the studying that I've been doing on this next coming cycle, it looks to me that the crypto market will peak sometime sort of in middle of next year, so middle of 2025, and that's sort of when we really want to be starting to take profits and have an exit strategy in place before we get to there. So that's something that we've been sort of doing recently, is looking at our portfolio and working out an exit strategy on our different coins. So just to give an example, so take Cardano for instance, which ticker ADA, which we have a lot of. We own a lot of Cardano, and the analysis I've been doing on that, I believe that it will peak in the next bull market in probably about $6 to $8, somewhere in that range. That's Australian dollars, and so we'll probably start to take profits at about $4. Now, bearing in mind that the Cardano price of today is $1.19, so it's still got a lot of time left to run before we'll be even thinking about touching it yet. And like I say, I believe that probably between $6 and $8 is where it'll probably peak out. So we'll start to take profits fairly heavily at around $4, and then just continue to do so for the rest of the bull market, until we sort of think that it's probably past its peak. So that's something that we're doing at the moment, is looking at our portfolio to work out an exit strategy on each coin. Now, we've got a lot of coins left over that we still hold from the last market cycle. So we sort of got in just as the peak was starting to play out. That's where we first got into the crypto space, And so a lot of those early coins that we bought were at quite a high price. So we're still yet to sort of work out an exit strategy on some of those early coins. But bearing in mind that we kept buying all the way through a lot of our portfolio, we kept buying all the way through the bear market. So that sort of made things quite a lot simpler to work out when to exit on those sort of coins, because we were starting to make profits fairly well immediately as the cycle started to, well, as the bull market started to sort of play out over the last, say, probably 6 to 12 months. So yeah, that's sort of what I just wanted to talk about on here. Kahlia, did you want to add more on that?
Yeah, so just a few figures that I wanted to, throw around and put out there, and just to sort of share a bit of transparency. When I look back into my books about the transactions that we done when we first entered the cryptocurrency space, so we're talking at the end of 2021, when we got into the crypto space, we were looking, we were obviously intrigued by the industry, and so we realised that it was out of our depth to sort of try and dive into it, which, I mean, we attempted, but we realised now we knew absolutely nothing. But because I think we were looking for something, we ended up sort of falling into our lap this amazing coaching course that we are still members of. And when we got signed up with them, they started us on our journey right from the bare basics right through, whereas up to where we are now, we were sort of talking, over 2 years of experience with them. And so when we got into the cryptocurrency industry with this coaching course, that is when we first started to invest really heavily into the crypto market. And as Nat was saying, that was sort of as that cycle was reaching its peak. So I wanted to do some figures just to put some faith and some inspiration back into everybody about what the crypto industry can do. When we bought Bitcoin back at the end of 2021, our highest price that we paid at the time was $71,544 Australian. These are AUD figures. Now, as Nat has just said, the Australian dollar value for Bitcoin as of the time of recording this podcast, 5th of March, is sitting at 102,000. Now, when you pump that into the calculator, that comes back as a 1.46x or a 46% increase. Now, what you've got to remember is that we rode that wave. So we invested at $71,000 and we rode that wave right down until it hit, like early 20,000s, around that $22,000 mark, is where it bottomed in AUD again. And then we've ridden that wave right back up now to where it is now at 102,000, and we've already scored a 46% increase on our initial investment. Now, the reason why I wanted to share this with you, because there's a saying in the cryptocurrency space, and we share it quite often in the coaching groups that we participate in. They say that you've got to have diamond hands. You have to be willing. You have to be strong. You have to be determined to ride that crypto wave. Now, if we had got scared, we went and bought it at $71,500. We were quite inexperienced, and I guess emotional would be the word, because this was our first pullback, our first experience in crypto, full stop, and we invested into it, and all of a sudden it was just doing this massive nosedive from 71,000 right back down to 22 or so. And so that's why our coaches push this saying about having diamond hands to ride that wave. And I guess the reason why I guess I'm touching on why we invested in this coaching course that we do is because if we didn't have them there to coach us and to guide us and say, hey, no, this is part of the cycle, this is what crypto does, ride it out, then we probably wouldn't be sitting here as passionate as crypto as what we are today. So that's just sort of what I wanted to inspire you with, to remember that even if you do buy, at the peak of something, ride that wave and wait for it to come back up. And we're not even into half of the start of the bull market yet. We're currently sitting in phase 2, as some analysts say. And we're already up 46% on our initial investment. So can you imagine what that's going to look like when we ride the wave up to the peak of the market, and what that's going to look like? So as Nat was saying, we have an investment plan in place where we say this is where we're going to take some profits off the top as soon as we reach, what our investment target is, and then we're in it for the long haul. We then ride the next wave. So I touched on Bitcoin because that is what they call the godfather of cryptocurrency, and so Bitcoin always leads the way. It is the number one on the list, and it leads the way, and then the other currencies follow behind it. And of course, second in line then is Ethereum. So I'll just give you some figures on the Ethereum market. So same time we were investing in the Bitcoin, we were investing in Ethereum. At the end of 2021, we were paying sort of around $4,500 for Ethereum per Ethereum. Now, when you look at today's value, here we are, 5th of March again, it's sitting at $5,500. And so when you punch that into a calculator, it's a 1.21x or a 21% increase. And the reason why I want to share this with you is because you can see the difference between a Bitcoin, between the Bitcoin return and the Ethereum return, but these other cryptocurrencies will flow and they will reach the same heights as what Bitcoin does. Nat just touched on Cardano, and same story. We've got quite a significant portfolio of Cardano. We were buying that at $2.20 back at the end of 2021, whereas today it's still only sitting at $1.19. So we're still sitting in losses in Cardano, but Cardano will come up. We have the greatest faith that it will come up. The markets say it will come up, and this is the thing. Even though Bitcoin's, making the history books again now, the altcoins, they're still following, their turn is still coming. And this is it, just going back to the saying of diamond hands, you have to have diamond hands to ride these waves, no matter what your investment is or where it is. And the other thing that I wanted to touch on while I'm touching on, the saying of diamond hands is, in the cryptocurrency space, they say that bear markets shake the weak hands, and that's what you see all the time. People just run away petrified because they've blown their investment, but that they don't have that long-term vision. They don't have that ultimate goal of saying, no, I'm going to ride this wave out, and I'm going to have them diamond hands. I'm not going to let the weak hands take over. So that's what I wanted to share with you. Now I wanted to give a bit of comparison to why we are so passionate about the cryptocurrency space. We have a relatively small share portfolio as well, and I looked into what we were buying around the same time, and one of the ones that we bought around the same time, so we're sort of talking the end of 2021. We invested in a project that we thought had some ultimate opportunities in it. That particular investment on our share portfolio at the moment is now sitting at a 10% loss. So if we had to put that same amount of money in Bitcoin, we would be sitting at a 46% increase. But we decided we'd put it into a shares, and we're sitting at a 10% loss in the same time frame. So I mean, we're definitely not against the stock market by any means, but it's just a bit of comparison. Just to sort of show the potential that the cryptocurrency market can offer and can bring. And same story, exactly same story as what we're doing with the crypto. We have the same strategy with our shares. Just because this particular company that we invested in at that time has decreased by 10% over the last sort of 2 and a bit years, doesn't mean to say that we're going to race out now and cut our losses. It's a case of riding that wave. You won't know for a number of years whether it will recover or not, but that doesn't matter. The investment's there, and it does what it does, and we'll let it perform good in its own time. So that's sort of what I wanted to sort of, I guess, encourage everybody, is to remember to have diamond hands when you embrace any investment. Have the diamond hands and be prepared to ride the waves as they come.
Yeah, definitely. One of the things that I love so much about the crypto space is that it happens so fast. So there's a saying in crypto that a long-term crypto investor has been in the game for 2 to 3 years. And when you realise how the crypto market works and how it works in a 4-year cycle, the 4-year cycle is like that is on the back of the Bitcoin halving that happens every 4 years. So Bitcoin works in a 4-year cycle, and then all the other altcoins, they follow the same pattern that what Bitcoin does. So when you have, like, say you have holdings in a certain coin, or say Bitcoin, and you miss that opportunity whether to get in or to get out, you normally only have to wait sort of like about three years or so, and you will have that opportunity back again. And like when you go to sell your holdings, and you're trying to sort of like get as far up the peak as possible, and if you miss that opportunity, then it's a case of just holding, and knowing that it's going to come back stronger again in sort of 3 to 4 years time from that point. So that is definitely the big advantage of the crypto space, is it happens so fast, and a lot of people, like, they get scared about the volatility and that, but for us that are in the game, we see it as controlled volatility, because it works on the 4-year cycle. So it's sort of, once you get to understand it, it becomes a fairly safe asset. We sort of look at it as, and like I was saying before, you need to have an exit strategy in place when things are fairly calm, because when the bull market hits and everything starts to go to the moon, it's easy to lose your head and let emotions get in the way. Whereas if you sort of coolly look at where you think that the asset or that particular coin is gonna peak out, and where you believe that it would be a good time to take profits at a certain price, then if you have that all in place before the actual FOMO kicks in, then you can just stick to that strategy and sort of just operate like a robot sort of thing, and not let your emotions take over. So that's sort of why I was just pointing out about the importance of having the plan in place. So that's about all I've got to offer on this one. Did you want to say anything more?
No, I guess the only thing that I wanted to really reiterate is that quote that we made at the start. The stock market is a device for transferring money from the impatient to the patient. And this is the thing: if you're impatient, then that's when you have to deal with losses. But if you're patient and you're willing to ride the wave and not let your emotions take control, then that's when you can be really successful, and even be successful within yourself. Like not letting the emotions take over, brings in a lot of self-discipline. And when you can overcome that, and when you can emphasize and exercise your self-discipline, that's when you can really see some amazing returns. So just wanted to, I guess, part on that note, to remember just to be patient and to have your diamond hands and ride every market.
Yeah, definitely. Self-discipline is the key to most investments, and I believe crypto especially, when you're talking such big gains and big losses as the market goes up and down. So that's about all that we've got to share on this one, and keep living the dream.